Bank earnings kick off tomorrow with Bank of America, JP Morgan, Citi, Wells Fargo, and more set to report. The group broadly weathering the storm of higher rates and the regional bank fallout in early 2023. And while our next guest expects a modest deterioration this year, he still believes the group is resilient overall. Joining us now is Christopher Marinac, Janney Montgomery Scott, Director of Research. Chris, great to have you with us.
Thank you.
The run in the bank stocks in the last part of the year seems to be not a good setup for the earnings season. I'm wondering, where you stand in terms of the valuation of these stocks at this point after this run, given what they're going to report.
So they're still inexpensive, Melissa, at 56% relative PE to the S&P. So that's not the issue. I think tangible book is going to grow better this quarter. The mark to market for AOCI from lower interest rates will be better. The question really is, did the interest rate move already happen? And if so, then the stocks could simply trade sideways for the short term. I'm looking for earnings to kind of be flat coming off of the quarter in terms of forward expectations on earnings. I still think it'll be a good quarter. I don't think you're going to have any major credit problems. I mentioned a slow walk on issues this year in terms of credit deterioration. I still think there's an awful lot of cash flow the banks have with their PP&R to cover future reserve growth when they need it. I'm hopeful the banks keep growing reserves. I think it's necessary to do that in this environment.
That's Karen. Thanks for being on. I agree with you on the general take. It's not a hugely significant quarter, but I do think for some of the money centers, I think the capital markets business should be a nice tailwind. Do you factor that in?
Sure. And I think that the comp that most of the capital markets businesses were paying during the year was limited. So you may actually get some of the reaction in December and November being strong that will help it be a better quarter from cap markets. I think that's a great point. And the extension in the first quarter could also continue. I think a lot of people did not do deals last year that actually could come back and do transactions. Private equity, even bank M&A could be a lot stronger this year and even this quarter.
Hey, Chris, Tim, Citibank, we talked about it last night, the $780 million restructuring charge is great news for me. I think the question for me to you is, are analysts starting to see that Citi is worth more on a relative basis to its former self?
I think so, Tim, because the deposits at this company, whether it's domestic or more importantly global, are really, really strong. And I think the deposits of any bank is really what drives the long-term value. So doing the restructuring, getting focused on making money, trying to grow tangible book value again to get the stock above tangible book is a really good thing. So I think the funding of the company, particularly worldwide, is very important to how the stock can come back.